Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. Make sure you are subscribed to our YouTube channel. Hit those notifications so you never miss an episode, so you're always prepared for the week ahead. Let's get right into it here. Hope you're doing well out there. It was a very bull stampede run to the upside here this week. Couple of things going on. First, we'll start from the last event, which was the jobs report on Friday, unemployment report. Pretty strong, right? Better than expected, better than analysts expected. I think the unemployment rate's still hanging out around 4.2. We've got inflation, which is kind of still ticking down / moderate here. And the economy, generally speaking here, isn't falling apart. Some signs of slowing on the margins, but we had some heavyweight tech earnings this week. Meta, Microsoft, huge move out of Microsoft. Both of those companies, though, in the Mag 7, really kind of propelling higher here. Apple, Amazon were kind of on the flip side, but the market still, I think, in aggregate here was pretty happy with some of the results that we got out this week. We also had rumors from China that they are interested in initiating trade negotiations. So, of course, the market really just got a bag of candy to get excited about this week. It was on a sugar high. It was squeezing shorts higher and really sort of pressing to the upside here. Building on last week's, it's sort of tech leadership, right? One of the themes we talked about last week was the bullish engulfing weekly bar in the NASDAQ 100, the tech leadership and the risk asset leadership. And that all got sort of built on this week. And then on the flip side, to make sure we're not too rosy here, you got interest rates which are starting to kind of put up a meaningful reversal to the upside. So we're going to talk about that as well. Now, before we get into today's episode, I want to shout out our sponsor, Investors Business Daily. We've got some links down here below to their products. Check them out this weekend. Market Surge, their IBD digital subscription. Help yourself with some new research from Investors Business Daily. So, without any further, let's get into this week's Stock Market Weekly episode. All right, here we go. We've got some charts in front of us. Warden TC2000, that's a charting platform we're using throughout this video. It's a platform we've got lots of cool things built for, including most of the layouts, indicators, and things you see throughout this video. So check out our website, thetraderist.com, to see what's available for TC2000. Now, let's get into the numbers here. 1 week returns firmly green here, 3%, basically across the board, even race for the Dow, the SPY, the NASDAQ, and the Russell. You can see volatility continues to come out of this market here, getting through some earnings and getting through some catalysts, the jobs report, and the VIX going into the weekend here at 22.53. If we take a look at sectors here, you can see almost everything was in the green, and the leadership this week was actually by industrials, followed by tech and financials. That's a pretty powerful trifecta there at the top of the list, really sort of leading the charge to the upside. Now, if we look at our sector trends here, this is that tale of kind of two tapes, or really it's the tale of two time frames. When we look here at the daily time frame, this is our smart trend filter indicator. It measures price and volume spanning across time with a little bit of secret, some special sauce of price action relationships baked into it. It's available on our website. It's available for TradingView and TC2000. But you can see that most of the daily trends have flipped up now. This started to occur last week. We talked about this, and you can see momentum is basically built in many of these sectors. We get basically green buy signals printed last week, and we're seeing that follow through to the upside. Now, if we throw on a weekly time frame, the big picture, all of these charts just move to a weekly time frame, and you can see that every single sector here with this indicator is still in a bearish to neutral state, right? So you've got this competing time frame, this competing, some would call it a counter trend bounce, some would call it a bear market rally, right? Whatever you want to label it, we are squeezing higher, we are retracing higher in the context of some downward momentum. So keep that in mind depending on your time horizon here as you do your homework this week. If we take a look at market breadth, we talked about 52-week highs and lows and how we were kind of in this middle ground for some time, and you can see that pretty much stayed the same despite all of the strength, except for Friday. We started to get just a little bit of showcase here on the 52-week highs, on the number of stocks hitting 52-week highs. We finally got a little bit of a noticeable tick up. We're going to need to see a lot more of that to get more excited about the sustainability of this uptrend, but it's a start, right? And that shows you how extremely kind of washed out we were kind of heading into this week. Now, another high-low metric I do want to draw your attention to is 1 month highs. And so if we look at 1 month highs here across the three major indices, you can see that we are starting to get now, based after or following Friday's session, a kind of an extreme reading, right? If I zoom out on all of these charts here, you'll notice that when the percentage of stocks in these respective indices start to get over, call it 50, 45%, 50%, that kind of marks a little bit of exuberance here, and stocks don't typically sustain that. And it doesn't mean we have to come crashing down, but maybe it means we chug sideways, we pull back for a day, we chop around, that type of action. So just again, after 9 consecutive days up here in the S&P 500 and a good deal of 1 month highs being made, I would just keep that in perspective here and be a little bit cautious if you're putting on a tremendous amount of risk on a Friday going into a weekend after the run that we've already had, right? So just be aware of that, but things right now are certainly, pointing to the bullish momentum here. If we take a look at our macro slide, you can see the dollar index was up again this week and yields were up pretty substantially. So the 10-year treasury yield, one thing we are going to want to keep an eye out. I know it's boring. Nobody really cares or wants to spend a lot of time looking at interest rates, but it is a very important market for us to pay attention to, especially in these current dynamics. And so with the 10-year treasury yield back up north of 4.3, it's again just getting to a where are you going situation. And if we start to break out and raise higher and start to move above 4.5, it's probably going to put some pressure on equities. We're not there yet, but let's keep an open mind. If we take a look at our commodities here, mostly down this week. Bitcoin managed to buck the trend, but gold, silver, copper, oil were all down this week. So let's take a quick look here at the high level S&P 500 weekly chart. Again, when we speak of the technicals here, last week we flagged this bullish engulfing weekly bar here in the S&P 500, in the NASDAQ 100. And we talked about the fact that stocks pretty much rallied off of poor news or bad news or mediocre news, let's call it, last week. And that was sort of your slight inkling to perhaps change gears, maybe think about where this market may want to go in the short term. And lo and behold, here it is, making a follow-through move up. Strong move of 3%. If we go down to the daily time frame, we officially close this gap here back on Liberation Day gap, let's call it. And we've retraced all of that Liberation Day whiteboard, chalkboard exercise that the president showed on its reciprocal tariffs. And in fact, I think I'm not even sure where we stand on tariffs now, but most of that seems to have been walked back one way or the other, and the market is back up at 56.85 or so. So this is an area now where we spend some time chopping around. Price has got some good memory in here, which were basically dip buyers coming in on those March lows, and then we started to consolidate sideways and kind of price in where tariffs might go. And so this is about now where I would expect things to slow down a little bit from as we start to digest and see where the heck this economy, where the heck the tariffs are actually going to land. And of course, the 90 days that they are supposed to go into effect. So for me, bulls have momentum here. They are in squeeze mode, but we are coming into some prior levels and overhead supply. So let's keep an eye. Let's see if we put on Bollinger Bands here. You can see the top Bollinger Band, which we haven't seen in a very long time, comes in right around 57.40. That seems, pretty reasonable to get into here, to chop around, to hit our head there, move sideways, digest, and go back and forth a little bit. 9 days up in a row. Again, look at all these green bars here. A couple of these days were up just marginally, but still it shows, of a market that is not just newly breaking out here, right? And again, to come this far, this fast, with some of this overhead supply, I would just be a little bit cautious. If we take a look at the NASDAQ 100, again, we got a lot of those big company earnings out now. And you can see this formation's pretty much the same. You didn't quite get 9 days up in a row. You had a little more chop and turbulence in here, but it's basically been a straight line after the Monday bottom of last week. And now we find ourselves, basically from the lows. I mean, if I cherry pick the very, very low here, that's 21% rally off of the real panic here. But even if I took a low down around the closing levels, you're still talking 17% up here in the Qs. Remember, sentiment was absolutely terrible. People thought you were crazy if you were going to even try and buy the dip in this market. And, again, back in these levels here, we were talking about having a shopping list ready, right? And I mean, I did plenty of buying SMH along with some other things that I think I mentioned at the time. But, this is why you buy that panic. This is why you leg into that panic thoughtfully and you have your levels you're looking for, is because, sometimes you will V-shape recovery off of it. And suddenly you're up 20%, 25%, and even more so in the more speculative names, in just a month's trading time or even 3 weeks, and that can absolutely make your year. So now that we've come, pretty fast, pretty sharp, it's time to perhaps just reassess where your risk reward is at the NASDAQ closer to 488, right, versus 400, right? There's a pretty good difference in forward future expected returns, I would say, at those two price levels, given the fact that, not a whole lot has quite frankly changed. So Qs here coming back in, keep an eye on, say, 493 or so. There's still some momentum going to the upside, but don't forget you are coming into some overhead supply. So that's kind of the way I would look at things here. If we take a look at oil, this had a really tough week, down 7%. Energy stocks down again, some heavy volume coming down, and oil is back to the lower end of this kind of multi-year range. Again, if you're more longer term, if you're patient and you're looking at this, maybe there's some opportunity here, but technically it still looks like a real difficult spot to be. It is definitely buying the blood or the fear in the market right now, though. If you are a bull on USO or even XLE, you can see hanging in a little bit better here. Actually, don't hate XLE here. I think it looks kind of interesting, especially with this potential higher low it's trying to put in a little more convincingly versus oil. So this has gone absolutely nowhere, though, for 2 years. So again, different outlook, different patience level, and lower beta. So just keep that in mind. But that was notable this week. And another one that's notable is gold, right? So gold had this huge rush to the upside. Nobody wanted to own anything else except for gold. Stocks were crashing. Get me into gold. Well, now stocks are rallying, and so folks are willing to part with their gold because there's higher beta to chase for the upside. So don't sleep on this, though, because if you are a believer in maybe this longer term trend or the sort of the fractures that have been created here from the geopolitical side of things, then you would expect that gold has more to it, even though it has covered a lot of ground. So just keep an eye on this pullback. It's basically 2 weeks down, really find and follow through to last week's high volume reversal. It's basically 7% from its highs. I wouldn't be surprised to see GLD get down to the 290s or so, and that could be an interesting dip buy opportunity, but it is notable notable this week. Also notable is Bitcoin as it continues to charge higher here, kind of trading with risk assets here in liquidity. You can see Bitcoin now over 97K. It's kind of chopped, kind of stuck in a range levels that it's been in for earlier this year, late 2024. But I would say, if this can stay over 92K, if this continues to base and hold and hang out over 92K, then it does seem pretty good that it wants to take another shot at this 100K level. So keep an eye on that. Nice, kind of just bull stampede here as well, not really letting anyone into this trade too easily if you missed a couple of these shorter term consolidations. So Bitcoin there, we have positions in it. And we are long. I am long Bitcoin. And what else? If we take a look at the Mag 7, which reported earnings this week, we are getting some separation here, right? You've got Microsoft, which is almost on its own planet at this point because it had this big gap up and it's back towards the top end of its range. Again, speaking of prior pivot highs and some overhead supply, I mean, I think there's going to be lots of motivated sellers kind of in here. So I would be, cautious chasing this, but certainly Microsoft is setting itself apart. Meta is, clearly starting to try and resume its momentum to the upside here, although it doesn't look quite, different look here for Meta, all things considered. But Amazon, Tesla, Apple, these all look a little vulnerable still here. Apple looks like it's, kind of rolling over, or has the potential to kind of roll over. Same thing with Amazon. It's kind of in a mixed state right now. And Tesla, I mean, this certainly got beat up pretty quickly and earlier on the sell-off. Maybe it's going through its pain process a little bit quicker here, but these stocks are now starting to deviate a little bit. And again, if you look even at the 1 month returns, you've got a spread of plus 14% to down 8%, depending on where you fit in this range. So, it's opportunity there, a little bit of separation. And quite frankly, I do like the fact that the market is, kind of, spending time looking at the individual, pricing these individual companies, not treating them all as the same Mag 7 basket, right? So next week, we've got Palantir, we've got Uber, we've got others that are reporting, other high flyers. So we're still not out of earnings season, but we are through, I guess, the bulk of it right now. But keep an eye on those earnings dates. And we have some more economic data coming out next week as well. So that's about all I have for this week's video. Again, if you caught the last couple of weeks of V-shaped move up, congratulations to you. You got handsomely rewarded for stepping in, buying the dip, and carrying through on this momentum. Now I think the fight gets a little bit tougher in the next week or two here, and markets may need to slog it out and digest truly where we are in these new ranges. I know our short-term trading system got caught completely offsides this week. It was trying to really leg into some short exposure, and the market clearly punished us for that. So our tactical trading system, which did such a good job avoiding all of the carnage, or 90% of the carnage in April, now finally got its hand kind of caught in the cookie jar, shorting this week, and the market sort of squeezed us up a little bit. So, it's a difficult environment out there. So again, if you aren't fully aligned with all aspects of it, then don't beat yourself up too much. Use the weekend to reset, draw your levels, map your levels, know your plan, execute on the plan, as not exactly that saying goes, right? So that's it. That is what I have for this week's video. Thanks as always for tuning in. Don't forget to subscribe. Check out those links in the description of this video. Take care of yourself. Have a good week, and we'll see you back here next weekend.